All right, we have got roughly 2 minutes to the closing bell. Helping us stream ahead and get there, R.J. Bryson, Wells Fargo Corporate and Investment Bank Chief Economist, as well as Adel Zouman. It's good to have both of you here. And let me start with you first, Adel. What is worrying you most? We keep talking about the Delta variant, about its potential impact as we're now in the third quarter of what's going to happen with earnings as we go forward. Is it going to slow things down?
So we are in the camp where we feel that this Delta variant fears are going to subside. There's been tremendous advancements, medical advancements. And, if you look at the vaccination rates amongst the vulnerable population, they're north of 80%. We actually feel that this Delta variant, even though everyone is scared right now, but if you look at UK, they are on the downslope. And we think that the US in a month or so is also going to be on the downslope. And I think that from an investment point of view, that has very interesting implications, because we feel that as the Delta variant fears subside, the reopening stocks, some of them that have been suffering because of that Delta variant fear, they are going to come back in vogue. And we see some really interesting opportunity in some of the reopening stocks, such as, for example, the financials. We see a great potential there.
Okay. Let's take a look where we're going to settle, because that's going to be roughly 30 seconds from now. The Dow going to be down about 140 points. S&P 500 will be down about 22 points, and the Nasdaq off about 100 points. Amazon pulling down the Nasdaq today, but don't take it from me. Let's take it from the closing bell as we hear the ring of the end of July trading.
And that wraps up the trading week and the month of July. As we take a look at where things stand for today, you're looking at red across the board. The Dow closing off 148 points. S&P also negative, as well as the Nasdaq. The Nasdaq off about 0.7%. In terms of the month, though, a bit of a different story. The Dow and Nasdaq both closing up more than 1% in the month of July. The S&P up more than 2% for the month of July. Healthcare, real estate, utilities, and technologies were the top performers for the month. On the flip side, energy, financials, the only two sectors closing the month of July in the red. But we want to bring back in our panel. And Jay, let me go to you, because we also got the data out from on spending this morning, household spending in the month of June. It actually rose. Yeah, we were just talking about the Delta variant, what that could mean for the recovery going forward. I guess from the economy's standpoint, how do you see this affecting the reopening process and what it could mean for the recovery?
Yeah, so it's definitely a downside risk. I mean, are we going to go back into lockdown mode like we were a year ago? No, I seriously doubt that. I don't think the population will stand for that. But if things do, move up significantly higher here and people do start to panic a little bit, maybe they're not traveling as much, maybe they're not going out to hotels and restaurants and things of that nature. Some of that spending on services, which has really picked up recently, you could see some faltering there. So, in general, our basic view is we think the economy will continue to grow and grow at a pretty decent rate in coming quarters. But this news about the Delta variant and potentially other sorts of variants out there, could throw a wrench into that. So we'll just have to wait and see.
Adel, you remain optimistic. Have you shared with us your long-term outlook for U.S. equities? But the S&P 500, coming into the summer, we kept hearing analysts tell us, look, get ready for a 5 to 10% pullback. That's what you always get. And it hasn't materialized. What's that signaling to you as we head towards August and September?
So, Adam, there are a couple of things that are happening over here. First of all, there's no doubt that the fundamentals are extremely strong, right? Take an example of the corporate earnings. More than 80% of the companies have actually beaten estimates. Secondly, there's a lot of sticky money in the market. Investors have developed this phobia called FOMO, which is fear of missing out. And a lot of these investors, they don't want to get out of the market. They'll move from one sector to the other, but they just don't want to get out. And that is one of the reasons why we haven't had a more than 5% correction in the market since last October. And in addition to that, we are in the camp that we feel that the Delta variant fears are going to subside as well. So we feel that, because of strong fundamentals, because of this sticky money that is in the market, and because of eventually the end being that Delta variant is going to subside, we feel that that is very optimistic for U.S. equities.
Jay, we're also getting developments on the infrastructure talks, the bipartisan deal passing a procedural vote today in the Senate. I'm curious, just from your perspective, what this means for the recovery and I guess how big of a boost it could potentially provide.
So in terms of what sort of boost does it provide here in the near term, I think it's pretty limited, frankly. And I'm talking about the next year or so. I mean, this is not like the relief funds where you put money into people's pockets and they can go out and spend it initially. This is $550-some billion of new money that's going to be spread out over a course of 5 years. And to get infrastructure up and running, get that spending going, that takes a while. So does this have an effect on the economy next year? Yes, arguably, but from the second half on, I think it's perhaps a bigger deal for 2023, 2024. But again, we're talking, if this is $100 billion of extra spending per year, roughly, I mean, we're still talking a $22 trillion economy. It doesn't move the needle all that much. It's a few tenths of a percentage point in terms of top line GDP growth, but it's not like we're going to have a 5% GDP growth rate for the next 5 years because of that. It's just too small to cause that sort of an effect.
Jay, it sounds like that's one of the reasons that you're telling your folk that one, Fed is not going to move its range, its target interest rate till the end of next year. But we will get news about tapering, don't you think, before the end of this year?
I think, yes, I definitely think we'll get some sort of news. I mean, they're already starting to hint at that. They did so in the FOMC statement the other day. I think you could potentially see another hint dropped by Chairman Powell at the Jackson Hole meeting next month, or maybe at the FOMC meeting in September. So I think they're going to start to hint at that. But I don't really see a tapering beginning until late this year at the earliest, and probably more likely, into sometime next year.
Jay Bryson is Wells Fargo's Corporate and Investment Bank Chief Economist. Thank you for joining us, as well as Adel Zuman. Thank you for joining us. Adel is with the Wall Street Alliance's managing partner.